welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the Broiler Chicken Show. Brian hanging out with you on a weekend. Hope you're having a great day, great weekend. Obviously, if you are a bull in risk assets right now, things are a little bit tough. But, they always say today's bear market sets up tomorrow's bull market. Tomorrow's bull market sets up the day after that's bear market. Back and forth, back and forth. So I actually do like the market, actually, the way it's acting right now. We had a little bit of topping action there in Bitcoin, I don't know, maybe a couple weeks ago, 2 or 3 weeks ago. All right around my birthday, actually. Actually, about a month ago. Sell in May and walk away. The funny thing is about that is you really only see that in earnest in hindsight. After the fact, you go, oh, Jesus, yeah, it did look like it topped in May, and we're going through the correction process. So ironically enough, actually, that's kind of business as usual. It's not really anything out of the ordinary. We often say as technicians that we kind of know what is going to happen. We just never know what the why is. Sometimes the whys can be even more outlandish than you could ever imagine or dream up. And you just got to kind of roll with the punches. I think also, too, this is a really good commentary on risk management in here. I do see a bunch of people that are actually cheering because they have stinky bids working, kind of like little old lady style. And they're actually cheering for lower prices. Yay, price finally coming down into my buy levels. So I even heard people in the TRI community were even buying bits and pieces here and there. If anything, that's an excellent testament to following your plan, right? You're not like sort of arbitrarily guessing, is this the bottom? Is this the top? Is this going to go up tomorrow? You've come up with some sort of analysis technique ahead of time, and when prices do come into levels that you said that you were going to buy, if price ever did get down into those levels and you actually did pull the trigger, then really all you're doing is following your plan. So, and actually, I was even posting in the TRI lounge this morning how, in a weird sort of way, if you're really good at technical analysis and you're actually a pretty good trader, then when everybody in the public is crying and moaning and lamenting about previous bull markets and riches gone by, that's ironically enough when you want to be most excited. Very odd thing about capitalism. And then on the flip side, and everybody and their brothers getting all stupid, that's when you should be selling into their euphoria. Hopefully that gets to the point. I don't know how many people actually watch these videos. It is interesting to see. About somewhere between about 500 and 1,000 people. So I think I do give some value in what I say, and hopefully what you hear is the same message week in, week out. The Beamish is always the same. He's usually right. He's usually early. Sometimes he gets stopped out 2 or 3 times before the actual pivot comes in, and then it takes off. And trader's life. Since we are sort of in mid-correction mode, obviously not a hell of a lot of banging out doubles of late. And ironically enough, when I was traveling on the road, that's when we had our last little mini bull run there. And there were a bunch of doubles, but because I was too busy driving across North America, I wasn't really paying attention and didn't do anything. Murphy's Law. Whatever can go wrong will go wrong at the worst possible moment, right? Anyway, um, I actually do like the idea that the market's backing up into another buying location, but that's sort of predicated on this 4-year cycle and how usually into the end of these cycles, price moves kind of parabolic. And also, too, we were even talking about in the lounge this morning how I think a lot of this market, it's like the market spends a lot of time probably the Bitcoin chart probably actually tells the tale as best as anything here. Like last year's correction window, I mean, it went on and on and on, just grinding sideways to the downside, sideways to the downside, right? I mean, that's a pretty long grinding slog. It's about the only word I can use to describe it. What was it? It was 34 weeks. And then what's scary is that, the breakout to the actual peak of this run at best, was like 11 weeks. But I might argue that most of the bull was actually done in about boom, 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 about a month and a half. Yeah, you can be generous and, say, well, I could have gotten a whole bunch up off here at, somewhere around 2 months, 2.5 months. But the irony of it all is that this is exactly what we teach in the education program. Nothing ever changes in this silly business. Markets usually range about 70-80% of the time, and then they trend about 20-25% of the time. So was this almost like a little mini? It kind of feels like it was kind of like a little mini example of that. But if we use that same sort of duration from the initial burst up, whereas here this was the highest high at the beginning of if we kind of use that same 1, 2, 3, right? 1, 2, 3, I don't know, something along those lines. You can see that same window takes us basically till the end of July, beginning of August before we start really like pressing higher in earnest. And then if we use that same logic from when we sort of started to break out to where we started peaking, it's somewhere in that area. So I do like the idea. Oh, interesting. I didn't know I had two of those. I do like the idea that really I don't see anything shockingly new here. The only thing that kind of bums me out, if you will, is just it definitely feels as though the magnitude of these moves in Bitcoin and really the crypto market in its entirety this cycle is it's a shadow of its former life. And I hate to say it, but I mean, how many Solana coins were made there through that last crazy window that we went through? I think I heard someone at the end of it said there was something like 1 million coins on Solana itself. There's million meme coins, technically pretty much worthless. So I do think, ironically enough, that there was growth in this space. It was just the growth wasn't vertical, price going straight up. The growth was horizontal. The market just expanded and expanded and expanded. And I mean, how the hell are you going to follow 1 million different things? I mean, hell, even the stock market only has, a few thousand penny stocks at the worst of times, maybe 10,000 stocks in total, but 1 million? I don't think so. So I was posting even in the lounge this morning, somebody did get very, very rich off of this cycle. But I don't think it was in the form or the fashion of previous cycles where there just wasn't that much liquidity in this space. There just wasn't that many names. When I first got involved in this space back in 13, 14 time period, I think it was like Cripsy. I think Cripsy was one of the places. I can see the platform. It was where I bought my very first shitcoin, UTC, I think it was called. And then, of course, they went hacked, went out of business, whole thing. I don't think it was Cripsy though. Might have been Cripsy. Anyway, you could like literally surf the entire crypto universe in about 10, 15 minutes. That was it. I mean, yeah, maybe there was a thousand names, but not a million. So I do think that the space has expanded. I think half the problem that I have in this space now is I got originally involved in crypto because how do I describe this? Working in the investment advisor industry and also being a student of the market for many, many years, I came to learn that societies move in a very predictable fashion. And based on the predominant demographic in a society, you can have a pretty good idea of what asset preferences are going to be had given that demographic's position in their life cycle. So the dominant demographic in our society, and I think it still is today because they hold all the money, is the baby boomers. And as they move through their life cycle through the 1980s, 1990s, and into the early 2000s, that demographic hit the peak earnings years of its life cycle. And so if you have, number one, the economy itself should grow as that demographic earns more and more and more money, peak earnings years. But also, two, they put that money to work because they're saving for their retirement. They want that money to grow. So they put that to work in growth assets, things like stocks. And also, too, as I said, economies are growing, economy is expanding. Stock market technically is the ultimate leading indicator for the economy. So as a result, it surges higher. Then as that demographic moves out of its peak earnings years and slowly moves into retirement, then their preference for assets shifts from paper assets, growth assets, to hard assets. This particular case, everybody and their brother saved in US government bonds for their retirement, wanting the most safe, secure asset. And so the demand for US bonds expanded dramatically and prices went sky high. At the same time, too, I think this is quite predictable because about every 80 years, this scenario in the bond market happens, debt instrument market, whatever you want to call it. And so every 80 years, interest rates go down dramatically. Interest rates are a function of bond prices. They're an inverse correlated relationship. So it shouldn't have surprised us to see interest rates go to dramatically low levels. And in those dramatically low interest rate environments, really weird, bizarre sort of side effects start spinning out from the fact that money doesn't cost anything. And the perception that money will never cost anything going forward takes over in society, and really weird things start happening, like, socialism, socialist ideals. You could argue MMT is a function of that. But also, too, the demand for hard, safe, secure assets, because bonds just aren't yielding anything. Yes, there's capital gains, but the actual yield on owning the bond, the interest payment, is falling and falling and falling. So people start searching for other alternatives. And I think that actually laid the way for this whole sort of crypto revolution. I do think, though, that if crypto had stuck to the principles that it started out as, this idea of proof of work, and there was value in the actual work, the validation of the blockchain, and people would actually build businesses and earn money and make profits off of validating that blockchain based on the principles that that work actually gets remunerated for actual physical tangible assets, whether it be fiat currency. I suppose nowadays most of Bitcoin's paid out in US dollars. It'd be interesting if what denomination well, I mean, people are paid out in Bitcoins, right? So I guess they can sell it into whatever fiat currency they want. But the point being that I've noticed a discernible shift in that we've moved out of the baby boomers heading into retirement. They are now fully into retirement, and their demand for fixed incomes assets and their lack of demand for growth assets, that trend has now played itself out. Now technically we're about 4 or 5 years, actually no, I beg your pardon, 7 years now into the next generation's life cycle, which means that according to my work, we transitioned out of that high demand for safe, secure assets, income producing assets, those kind of things. Actually, ironically enough, just before the scamdemic. So it is an interesting historical comparison. I've also noticed too that these demographic shifts, they sometimes correspond perfectly with celestial events. And I have a feeling that the celestial events play a far greater role in how we humans act and behave and think than we humans on the planet will acknowledge and sort of appreciate. Actually, I was even talking to somebody yesterday about the fact, we humans live on this planet and our reality is based purely on the senses that our human bodies can pick up. So like something like radio waves 500, 1,000 years ago was completely meaningless. But now because of our technological advancement, now radio waves are a huge part of our society and our existence. It's purely a function of our ability to detect that. So my hunch here is that these planetary events, they do act as a bit of a stopwatch in the sky. And, our human life cycle is fairly predictable. So I think there's a lot of correlation between things like the Jupiter-Saturn cross that happens about once every 20 years and those respective generational shifts. Sometimes you see those generational shifts and the celestial events line up perfectly. So like 2000 was a really good example where they lined up just spot on. The last sort of demographic shift was 1980, 81, 82. And people often say that the bond market was actually the official start of that 1980s, 90s baby boomer boom, when the bond market finally bottomed out and actually interest rates turned back up again. That's a function of that 80-year money cycle. Anyway, the point I'm trying to make is that I think Bitcoin came along and was developed as one of the responses to this demand for hard assets in the marketplace. And given the fact that interest rates and the cost of money just kept falling and falling and falling, new, more progressive ideas about, in technological innovation, those kind of things could really take hold. And I think that in that really, really low interest rate environment, we went through one of the sort of our funny little human irrational exuberance phases, as Mr. Greenspan would like to often comment about the market and human behavior through somewhat illogical times. And, this whole altcoin market, poop coin market, whatever the hell you want to call it, it was able to develop itself. And when the cost of money was nothing, I think people were willing to borrow money and throw money at these ideas with the anticipation it doesn't really cost too much money to borrow money from the Fed at like 1, 2, 3% kind of idea. But that interest rate cycle has turned. Like I said, I think the cycle pivot was actually the end of 2018. Then, of course, we had all the sickness and all that craziness thrown in. We had the Jupiter Saturn cross. We had like 6 different celestial events all happen in these early 2020s. And you can clearly see that the world, when we come out the other side of all of this craziness, the world is going to look very, very different than the world looked like when we were heading into it. If anything, I think one of the talking points of our newsletter this week speaks exactly to that. And I think a very, very big development has happened here with this quote unquote Genius Act. I'm not quite sure how genius it is, but that's another conversation for another day. Just like was the U.S. CARES Act, did they really care? They care about the fact that the population was going to be hyperinflated into the ground? Not really. But anyway, did find it interesting in this new bill that Donnie wants to pass in the U.S. Congress. They're going to literally sell off every single EV vehicle the U.S. government bought for the Postal Service at probably just a horrendous, massive loss. Oh, goodness. These crazy humans. Anyway, that's another conversation. So, but the point here is it hasn't completely passed the U.S. government. So this isn't like it's legislation today. But the way legislation works down in the States is it has to pass both houses of Congress and then be sent to the president for an endorsement signing. And if he doesn't like it, he can always veto it. And then it gets sent back to Congress. But this is the kind of thing that I think Donnie wants. And all of the special interests around him want. So really interesting development here with this stable coin evolution, if you will, of crypto. The problem here, though, is we're getting so far away from the original intent of crypto. The proof of work, immutable blockchain. Now, unfortunately, Donnie and his whole family, and I'm sure there's plenty different players in there, like Dan Friedberg type people, issuing 1 million different Solana coins that all kind of really don't have any value. I think, unfortunately, that the crypto space is turning more into a bulletin board, penny stock kind of environment than the classic commodity story, which is what actually got me originally interested in crypto to begin with. I think it is an actual natural evolution. I think it has to happen. The only way crypto is going to survive here is, ironically enough, and I've shown you, I think last week, through the Fed meeting, I showed everybody what the real value of crude oil is, even relative to 2007 levels. I mean, it's laughable. And the funny thing is you got gold at $3,000 an ounce right now, but that is $3,000 an ounce gold. Is that actually expensive? I mean, should be educational for all of you. Because frankly speaking, I don't think $3,000 gold is that expensive. And if you can justify Bitcoin $100,000, does that mean that maybe you can justify gold at like $10,000, $20,000, $50,000? This crazy ass world, it wouldn't surprise me. But I don't know. You tell me. Let's see what we got here. Looks like it's moved up quite a bit recently. But does that price look cheap? Does that price look expensive? The last time we went through an absolutely horrific inflationary scare, gold was way up here. That's 1980. So you could technically argue that we're not really that high in the gold price. I know Chris was kind of suggesting. Chris is a bit. I think Chris, are you a bit of a gold bug? I think he's got gold running in his veins. Oh, he wants to say something. I can't
Yeah,
hear
sorry
you.
about that. Took me a little while, but I think I have recently acquired my gold membership card. Yes.
All right. So the irony of it all is that, if you believe in fog and bombs and chaos theory and all that, geez, if we go and break this high, then I mean, we can really start talking about some insane levels. There's your fog and bombs. Interesting how 2.618 is basically a test of that old historic high. Now, what is this in actual dollar terms today? I haven't got a fucking clue. Might be 10,000. It might be 100,000. I have no idea. Interestingly enough, actually, for the longest time, I had and I still do, but the damn stock's running away from me. But I had a total plan where I wanted to go and load up on Newmont because back in the 1970s and 80s, there's 1981, 82. And you can see what Newmont did into that sort of mid or 80s window. I don't see any reason. It sure looks to me like history is repeating itself. And I was kind of hoping we'd get one more pullback here against these lows. And if I'm lucky, maybe we can get that. But I definitely think I could easily see these gold stocks go absolutely crazy here. And the worst part about it is that if we actually look at that 80-year money cycle that I was making reference to, if you actually look at where we are on that respective 80-year cycle, it turns out that in 1947, 1948, there was absolutely horrendous inflation. You thought that the COVID inflation was bad. God, you ain't seen nothing yet. And what's fascinating, of course, is I recently walked everybody on the TRI site through the crude oil chart now. I think you could easily make the argument. You can't really see it because of all this nonsense. If we use the ETF, I think we can see it a little bit better. That to me sure looks like a big bull flag, eh? And it's fascinating listening to these central banksters. I mean, I don't know what school they go to or what school they went to, or whether they are purposefully misleading the public. And I do think that actually that's what it is. But I've played this game now for, I don't know, geez, a freaking hell of a long time, 35, 40 years, something like that. And my entire time, energy has always been the ultimate leading indicator for inflation. Always, always, always. 1990s, we had energy prices falling consistently, and inflation was nice and low. Early 2000s, George Bush Jr., corruption, crony capitalism, all that crap. Oil prices. I remember two hedge fund managers had a bet whether they could take crude to $200 a barrel through that and kind of stupidity. But I guess just the point here is that looks like a very bullish chart. And if this takes, there's 27, there's 28 right there. That's when we should experience that insane inflation. If this thing runs up through that window, that it would be perfectly symmetrical. If you're a fan of WD Gann, he likes to use time and price. So I think you could make an argument that if all we do is we just replicate time studies, that's the time took to go from base to peak. Is this the base of this? Well, that puts us out there. And that, hey, look at that. I'm getting pretty good at my squiggly line theory. And I mean, look how high these prices are. And then you look around the world and Does it make sense? I think the headlines today I saw were Iran's parliament, in of course a very democratic and very thinking about the people, not, but Iran's government has officially decided and voted, of course, because they are a democracy, not to shut down the Strait of Hormuz, whatever the hell that means. Anyway, I thought I saw some news articles. Maybe it was on Twitter where I saw them. So, fudge. Yeah, these pages are all breaking. So, my apologies. Looks kind of amateur. Anyway, somewhere on here, Iran has officially decided that it's going to shut the Strait of Hormuz, right? And it was even put to a vote, which I thought is hilarious. I don't even know whether they can or not. And of course, you could probably find better sources for this. I don't think I'm saying anything that's like, oh yeah, prove it. No, you're lying, Brian. No, I can't see it on here. Anyway, so the point being that you can't really write better fiction than reality. It's interesting that in generations gone by, especially following the Vietnam War, and it took like an act of God to actually get the U.S. to be comfortable with injecting military. I mean, you saw what Bush and all of their cronies had to do to get the Americans motivated for their war on terrors and all that crap. If anything, I find it a bit amusing. Taco. I think if anything, Donnie's probably taken personal offense to that name. And he probably did decide to do this just purely out of, well, I'm going to show those bastards. Call me Taco. Oh, God. So anyway, the point of the matter here is it does look to me like energy prices do want to go up substantially here. And of course, that feeds right into my 27, 28 hyperinflation environment. And ironically enough, this all comes full circle. Why do I want to get long these big gold mining stocks? Because I do think that there's just going to be nothing more than just a repeat of what we saw back in the 1980s. Look at that move, eh? So, like, I do think that this kind of environment is ahead of us. The only problem that I have right now, to be perfectly blunt with all of you, is this cycle for Bitcoin. It's running out of time. We haven't got much time left on this, kind of like the Newmont chart. And I am starting to see this more and more. And I think even Basant's reference there that I tweeted out a minute ago, Chris shared with me about stable coins and how they're going to grow into this massive market of US debt issuance and stuff. Of course, this worked perfectly for the banksters and, well, perfectly and unperfectly. This is going to be an interesting dance between Treasury and people who would like the US government to be more in control versus the banksters sort of running the show. This is going to be a really, really interesting dance between the two of them. You could make the argument that the U.S. government endorsing the stablecoin market is kind of like Lincoln and his greenbacks, in that, historically, what usually happens, of course, is that and usually, I mean, like since well, and really, hell, you can go back even hundreds of years, probably even the burning of London and the ending of the tally stick system. Basically, debt issuance was money. So I do think that the plan is that the U.S. government is going to issue debt, but these stable coin people are going to actually replace the bank, and stable coin people, that's really the private sector here that he's making reference to here. So I think the Treasury wins and the private sector will win. And I thought it was interesting down here. You saw, you're probably going to have now Apple money, Google money, Amazon money, Facebook money. All of these people will now be able to issue their own stable coins under this proposed legislation. And whose lunch is that really eating? And I think this is the important point here. And notice that my retweet of this was, notice he didn't say it was a win for the Rothschilds. I mean, I'm sure the Rothschilds are going to definitely be in on the business, but my question here will be, does the central banks, who are basically controlled by the Rothschilds and that sort of cabal, if you will, I use that one particular name. It's probably Joey Diamonds are sprinkled in there, although my hunch is Joey Diamond would be considered a peasant around the people like the Rothschilds. Can we actually even put an identity on these people? No. I mean, we call them the banksters, the elite, the 1%, whatever the hell you want to call them. But I do think to a certain degree that this is going to eat into their pie. And so the question I would have here over the near term is, are they just going to roll over? Are they just going to accept their fate? I don't know. I don't think so. And the whole point of what I'm trying to say here is that we're running out of time on this rally window. I'm a little worried that they're going to try and jam through all this legislation and stuff. And then once we get over here on the other side of this cycle pivot, and more importantly, where's our funny little boxes? Where'd my boxes go? Oh, that sucks. Actually, I don't think I have it on this chart. I think it's this one. Yeah, there's our boxes. Once we get on the other side of this 1.382, all of sort of my euphoric, optimistic expectations for this space and really for the venture cap market in total, I think I got to temper those enthusiasms. All right. So here was the 1.382 of the last cycle. Nice bull run into that cycle, and 1.382 of the last time Donnie was in power. And in a weird sort of way, this is kind of how I think that this cycle has to end. If you actually look at like Donnie's coin himself, where do I have that? I don't think I have that on here. Oh yeah, maybe I have it over here. Where's Donnie? Donnie. I don't, because this cycle is all about these meme coins. And really, Liberty, whatever the hell it was called. I actually don't think that the crypto market can get going again, and the altcoin market can get going again until this thing turns around. It was kind of tragic that it was just such a cliche the way that they ran it up right into that silly dinner that he had, and it was so funny. Even like people interviewed there, even the food sucked. Typical. Trump wouldn't even spend money on half decent food for that dinner. But anyway, we are coming down into some interesting levels here on this silly little name. So we have actually gotten back to trendline support from whatever this low is. That doesn't necessarily mean it has to bottom there by any means. It can, market will do any old damn thing it wants. And I have noticed quite a few of these altcoins they're just not finding bottoms. Like, in times gone by, and actually it's funny. I even one guy that I day trade with in our day trader room, he does like to buy these sort of Wyckoff check levels. And you can see the market tried to Wyckoff check there and bounce and just nothing. It's just, there's no buyers there at all. I guess you can say we have trade location, but the problem is what the hell is one of these damn things worth? This is the scary part of this equation. Theoretically, we're supposed to be rational investors. It's kind of funny how when you go on social media these days, right? I'll even type in, what is rational investing? You get the weirdest answers by society. What's really bizarre, rational investing is an investment approach that emphasizes logic, data, and a well-defined strategy. Not really. I mean, hopefully everybody makes good decisions. But I don't, that's not exactly what rational analysis is. I mean, what's fascinating is how this definition has changed over the years. I mean, I first learned from John Bollinger. He tried to coin this term back in the 1980s. And I don't know who these guys are. Is that highlighted on purpose? I'm not sure how this works. You see the when this book was written? Where would it say on here? Real estate investing, rental property. Can you guys see when this book was published? I can't see. I mean, there's March 2017. Is that when it was published? So I guess the point I'm trying to make here is, and I actually feel kind of badly for John Bollinger, to be perfectly honest with you. Is he was the one. I'm a big fan of John Bollinger. I really like him. He was at, in fact, I even remember being at mining conferences back in the 90s with him. But he had basically coined it. And, I call myself the rational investor. And I was a little sad that John kind of gave up on the term. And it's weird how Wall Street just doesn't want to. I don't know what it is. They just don't want to. They don't like this term. I don't know why. But anyway, according to John, and basically how I live my life and why I call myself the rational investor, a little concerned that I don't think a lot of people at the Rational Investor website do the same. But oh well, I guess that's up to the gods. But what theoretically John originally called rational analysis was the intersection of fundamental analysis, oops, and technical analysis. So it's like really the good rational ideas are when the fundamentalists who look at their data sets say, you know what, that's a good investment idea. And the technicians, they look at their price charts and they go, you know what, that's a good idea. That's this area right here where they overlap. That's the whole premise behind rational analysis. So the problem is how could you even look at an asset like this knowing that there is no fundamental value to this whatsoever? How can you look at this and come up with a rational investment idea? You really can't. So I don't know. Unfortunately, I think a lot of what's happened with me is it's sort of like tilting at windmills and Don Quixote and all that kind of talk. Where, like I sit on social media and bitch and complain how people call these tails and they'll call these wicks. And it's just like, oh, it drives you crazy. Sure, it makes Japanese candlestick people go nuts. But it doesn't, nothing changes. It's still, I hear people call these like wicks all the time. And it's like, well. So anyway, if anything else today, you got a very good demonstration of what rational analysis is. And the simple fact is that maybe technically this is an okay level to consider. And if I'm doing things like little old lady portfolio on shitcoins and stuff like that, ironically enough, most of the shitcoins, they don't even have any fundamental justification for being alive, which is, I mean, you laugh about it, but it's, playing it for fun. And the whole point of the little old lady strategy and approach is you don't get hurt if a name goes under. So yeah, you pick your levels. But it's very, very difficult for a guy like me to look at the crypto space right now and talk fundamentals. Very difficult for me. And something like this, even though, yeah, it's not against bottom of the range, I wouldn't have a problem. Nanny nibbles, little old ladies, that kind of stuff. You want to go in and play in this space. But make no mistake about it, folks. And I think that's probably the big message I'm trying to convey to you, especially given where we are in these relative cycles. Like, I hate to say it, but a lot of these names, and, learn this fib time tool. It is absolutely invaluable, especially with an asset like Bitcoin, because it is on the same cycle as the money cycle. And of course, I think they did this all on purpose. But the 1.618 to the 1.786 window, this is your buying window here. So you can see 1.618 to 1786, like that window, that was your buying window. Now, do you use reload zones to get some nice stinky bids and fills right down against those lows later on? You can always do that. And I do know one gentleman in particular I worked with, he did work a bid right down here against a level that, we teach in our education program against this original W. And he pulled off just an absolutely incredible Bitcoin buy right there. And you see how that trade went. But you can go back. I mean, this was when I first really sort of in earnest got involved in the space. And there you go, right? The bottom, 1.618 to 1786. That was your buying window. So in this case, though, you work those stink bids. And there's another gentleman that I've worked with for a number of years. And he's still, I guess, where was it? Well, I guess it was over here. Well, no, I guess that's quite a bit further away. Anyway, he's still working his bids to buy Bitcoin at $600, and he's wondering when he's going to get his fills. The scary thing with an asset like this is if somebody comes along with quantum computing and can hack the passwords of these Bitcoins, you might get that $600 fill tomorrow. You never know in this crazy ass world. So anyway, the point I'm trying to make here is 1.618 to 1786 windows. Those are the buying windows. 1.382 windows here, you have to appreciate that price has been bid up dramatically. We're not there yet. And according to all of my crazy logic, I don't really see any change in this picture. And I'm still looking for a nice blow off top here into the end of the cycle. But I think also too, this, going back a moment here, I think this describes this kind of market state in that, just even if we use Mr. Wonderful here and his asset, notice, and I don't think I'm going to quiz you here today because it just takes too much time. It's too much to talk about. But notice just even this period here, from here to here, right? Full on meltdown mode to, hey, we're right back. And now we put in a W, call that a consolidation, whatever the hell you want to call it. That kind of window. And that is 15 bars. And notice how long it took to go from breaking out to top of the market, 4 bars. So there's your whole 20, or in this case, 19 bars. And 4 divided by 19, that sounds to me to be about, 21%. There's that markets range 70 to 80% of the time, and they trend 20 to 25% of the time. Okay, something like that. So, and then what's really bothersome, of course, is up here. Everybody extols about how wonderful whatever the name is, insert whatever name here. And what really sucks about this is the market spends, how long does it take to actually M out here? I think you can go all the way over to here, but it spends, a heck of a long time just distributing to the public. And of course, the public's all, okay, this is a new bull market. Here we go. Shit, no, it's not. So anyway, I think that this is the kind of market state that we're in. And I think it also sort of speaks to what we saw even in Bitcoin last fall. And where's the tweet? Yeah, here. Kind of like this, very, very long consolidation, right? We measured that out. It was like 35 weeks, and then just 1, 2, 3, 4, 5, 6, boom, you're done. That's the end of the bull run. And then literally we spend, I don't know. I mean, you could technically argue we tried to break out top here, but we couldn't close up top there. And so we faded away from there. But just the point is that really the lion's share of the bull market was just chunk, 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 chunk done. And I think that's what's going to happen here, folks. It's my humble opinion for whatever it's worth. And, keep in mind, I always tell people on the site, I'll give you my opinion, but I hope you realize what I think of people's opinions. I don't give a high value to people's opinions. I want you trading setups. Setups are priceless. Opinions are worthless. I think you could make the argument for your cycle, 1.382 sort of pivot cycle. I think you could make the argument that that's not a bad setup. I don't know whether I want to use the term setup, but I think it's not a bad sort of target kind of thinking. And I also wouldn't not make the argument here that this is actually broken. We were getting really close to starting to trend lower in earnest, and the market quickly took back this bear. And usually when I see that, it's tough for the market to break through this again, because this was a huge distribution and then violent accumulation. And, according to our rules, I'll just say Brian's rules, we really shouldn't even make a judgment about this market here until at the very least, we just simply test 38.2s. This is why I call this in the education program that I wrote over the years and I've taught at TRI over the years. I call this the first stop target. It's just what markets do. They often retrace, sometimes violently, but they often retrace that 38.2% of whatever that recent move is, just to simply flush out the weak hands, the people that came in and chased the top. Remember that doofus in the gold market there a couple months ago? I'm going all in on gold. Now you're going to get your head handed to you. And sure enough, gold basically did a 38.2 pullback and wiped all those people out. So actually what I see here is actually pretty normal. This is business as usual. If you were a sucker and you chased and you bought up markets, well, you got your ass handed to you. And hopefully you learned, don't chase, don't buy up markets. You're going to get your ass handed to you. And the irony of all of this is I even put tweets out to the effect that once we got up into this area, you can actually start seeing like daily short setups start to form. And this is fascinating. I mean, it really is, because it's a perfect testament to put your opinion away. When we were racing up here, of course, everybody and their brother were insane over the top bulls. And just trade setups. And there was some guy on social media who was even basically bitching at me. Oh, you're a moon boy, and market's not going up. And I was like, I don't know whether you've been following me, but actually I've been highlighting short setups on Bitcoin recently. So I'm not quite sure where you're getting off on this. I'm a moon boy kind of guy. But regardless of that, the point here is the market put in an M. And it put in the M actually on a really, really pretty confirmed bearish divergence with Willie Stupid. So you could make the argument that actually this is a very, very consistent setup that works. And hell, I used to trade the stock market with this setup like 20, 30 years ago. And really, I even learned it from a guy named Ken Roberts, who was a commodities broker and turned newsletter writer. Um, God, how long ago was that? 1989. I think I got first introduced to him from Howard Ruff. If you've ever heard of Howard Ruff and the Rough Times. And all he did was he would short M's and take profits at 50% rolls. Very, very simple stuff. And he would trade the commodities markets just using that basic principle. WD Gann 101. So this setup is actually incredibly cliche. And it's fascinating because this, and I even put a tweet out earlier today saying, I could literally teach an entire course off of just this one image alone. There's just so much incredibly valuable information to learn from this one image. It's fascinating how just even now, and ironically enough, the gift that God gave me through COVID was learning chaos theory. So thank you, God. Appreciate that. And I think I've now gotten to the point where I use chaos theory pretty well. And also, too, I will say, chaos theory has been a collaborative effort at TRI. This was a level that one of the TRI principals, Julian, introduced to my thinking. And you often see actually the market obeys this 1.618 off of these double tops very, very closely. So it shouldn't shock anybody why the price is actually stopped exactly where it is right now. It's kind of cool when you see that. You go, damn, this is pretty cliche. And actually, this chart's a little old. The one that I tweeted out is a little bit more up to date. So I don't think there was this bot actually. It's pretty old. I don't need that on there. Chaos theory, interesting off of this original M top. I would argue 1.618 and then 2.618. I mean, incredibly valuable information. Then we rallied back up, and I think because we went back up into the original M, I think actually this chaos theory sort of becomes null and void when the market does rally back up here. But you can see today's price action. We just confirmed this big M. And oh boy, that means we need to paint some even bigger Feigenbaums. And now that we have this smaller M, and we also have another smaller M we could do here, but because we've got this bigger M now painted, my hunch here is that 1.618 off of this bigger M is going to line up with that 2.618 off of there. Let's see. Survey says. Boom. Oh yeah, look at that. So there's 1.618, there's 2.618 off of this M. And I wouldn't be surprised if we did one off of this little M, although the chart's going to get pretty busy. That's going to be 4669 off of that. But let's see. Survey says. Yep. So yeah, 1.618, 2.618, 4.669. What do you think the odds are we're going to hit that 50% level? I'd say pretty good. So as you can see here, according to my trading rules, like I said, this is, I could literally teach an entire course just off of this one image. There's so much great information here. So there's your original M. And of course, it came on that massive divergence. This market was screaming trouble. I suppose if I was going to use this chart to teach the RSI model, we got a big ass sell signal there on the second M through the 50 line. Oh boy, that's a big ugly signal. And ironically enough, it's now only now playing itself out. But you can see on 50% of whatever the anticipated move is, I get permission to move my stop to scratch. And you can see how that was just a little bit lower than this low here, right? It looks like, and it's weird how I think the chart I did up for the Twitter feed was the tether chart. Actually, I kind of like the tether levels even better. So let's head on over there. I'll show you that chart. Where is that? And wow, is Donnie, you know, I debated whether I should put this tweet in the newsletter or not. And Chris was like, that's a bit controversial. Maybe I should have said, no wonder he's off destroying stuff because he's getting destroyed in the market. But this is also another chart. This one image I could literally teach an entire course off of, whether it be head and shoulders tops, whether it be key reversals, whether it be you better hunt W's on other sides of trend lines or you're going to get wrecked. Whether it be don't buy unless we're in reload long zones. But wow, what a great story. Or even, hey, just short the damn key reversal level if it fires, right? The signal actually comes in on this candle here. But Donnie's getting absolutely destroyed in the marketplace. Love it. And I think this is half the reason. And God, if you listen to his speech yesterday, the way that he was like praying to God at the end of his speech, did you guys hear that? My goodness. Wow. Oh boy. Oh boy. They always said that the end of the world was supposed to be here in the 2020s and 2030s and stuff. I suppose the final tell that Book of Revelations is for real is I did hear that the Europeans now are trying to actually drum up money to start building an army, and Revelation says that some sort of European general comes in and occupies the Middle East, and that's the end of the world. Maybe it's going to be Vladdy and one of his Russian generals. Who knows? I wonder if revolutions they considered Book of Revelations days they considered Russia part of Europe. Did hear that Vladdy's trying to stick his nose into business there in Iran and all that. I suppose we could probably sit here and talk all day about end of world stuff. One thing I will say, and I thought it was kind of funny on Twitter the other day, somebody posted, if you see it's the end of the world or World War III tweets, you know that it's not. I thought that was funny. Anyway, where was I? I was talking about the Bitcoin short, eh? Yeah, so this was the original tweet that I put out. Then I updated it today. The one thing I absolutely love, I think I love this more than I actually love making money in the market because I hate fucking paying taxes. And now that I'm sitting on a big pile of money, I don't need to go and make a bunch more money. Although if I want to buy a house, mind you, I think there's going to be a real estate crash here in Canada now because you can actually see the way that the Canadian real estate market is going now, for whatever it's worth, total side tangent. It's exactly the same as the way the US real estate market went through the summer of 2007. And it's identical. I mean, like the new listings now in Canada is actually at historic highs. There have never been more houses for sale in Canada than there are now. Oh, that's a potion for disaster. And of course, the average Chinese citizen is completely broke. And of course, the whole fugazi about pumping up this real estate market was built on this idea that we were going to have a never ending stream of immigration coming into Canada and more demand for housing. And now it turns out that the immigration numbers have actually gone to zero. Not everything has gone full stop. So it's exactly the same scenario. All of the fundamental justification for bidding up the real estate market through the early 2000s is now as it was then in the US market, the 2000 and teens really for China. All of that fundamental justification to be bullish is all gone. Now there's just this massive, insane oversupply overhanging the market with hyperinflated prices, and the time bomb is just ticking away. Tick, tick, tick. Anyway, should be fun to watch the absolute shit show of the Canadian real estate market over the next few years. All right, back to our story. So this was the Bitcoin Tether short example, same sort of thing. So there was that double top, divergences all the way up here. We also had trendline resistance, but that's another. We won't go into the justification for the short. That's the old story. This story here is just simply how you have your trade setup come in. You have location, parking garages in this case, trend lines, whatever. You had your divergence. I showed you the MACD div. I showed you Willie. I saw the two M's in RSI. Lots and lots of indicator and confirmation that things were looking a little grim. And then finally, you get this M that comes in on price. And this came in near the end of May. And how ironic. What are you supposed to do in the month of May and walk away? And isn't it fascinating how you can only see this in hindsight? I mean, I actually thought that the market was going to bottom into my birthday, but no, it actually did the exact opposite. It topped into my birthday. Jerks. Actually, that's last week's, isn't it? Where is this week's? And I even noted it. I couldn't believe how cliche this was. What the hell is that? Here. I mean, look at this. This is so cliche. There is the month of May. And literally, the moment the month of May stopped, and interesting, all these celestial events, there's Brian's birthday right there. As soon as May stopped and then the Saturn went into Aries, oh, we've just been in shit show since then. How ironic. And actually, I still think that we'll probably bottom somewhere through early July. That's what usually happens. And 38.2s, you heard me barking there earlier about 38.2 should be tested. This is a really important trend line going back years. You can see how the market ran into resistance, then support, 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 support. Oh, support. Okay, still support. No, lost it. Then rallied up, resistance. No, quickly caught back, acted as support on this funny little better call that a wick, not a tail, right? Shooting star. Then we accepted at that level, shot up, and oh, what a big surprise if we come back down and kiss this trend line again. It would just make perfect sense. 30 period moving average is interesting how Adam, say your line. Fascinating how Bitcoin here literally, and it's, I mean, I love trading with Adam on a daily basis because the one thing about you need to be as a day trader, if you do fancy yourself, you want to think about becoming a day trader, learn from Adam what you absolutely must do. Actually, not that screen. That's my day trading screen. Sorry. What do I want to show you? Weekly chart on the Bitcoin right here. Yeah. 13 EMA acting as support. Notice, look how it acted as support, acted as support, acted as support, acted as support, came right back and closed on it, and then lost it. So why would we not expect 13 EMA to act as support here now? Wouldn't surprise me one bit. So anyway, point of the matter here is, and actually I had this on the chart for a while now. If you did want to participate in this Bitcoin rally up top here, I really did not think it was a good idea to be chasing up markets. I guess we can go back to the daily chart, but it's interesting how these moving averages here, they correspond. The 200 period moving average on the daily chart actually usually corresponds really nicely with the 30 period moving average on the weekly chart. Try it out sometime. It's quite remarkable. This is the reason why I like using these moving averages. So in a weird sort of way, the moving averages scale. So you can see there is the 200 period moving average, which I think is the equivalent to the 30 period moving average on the weekly chart. There's the 50% level, WD GAN. You'd like to see us revisit that 93 area. And then I showed you on the tweet, which is the Tether one. I did find it really interesting that the Tether one, well, and even Bitcoin itself, I often find that Bitcoin itself loves to pivot off of big, fat, round numbers. And if anything, when we saw the market run up to $112,000 even, that's this high right here. You see when I put my mouse here, 112,000 even, that should have been a tell to us. But it is interesting now it's not so much on here, but if I go back to that Tether chart, I did find it fascinating that the 50% level is basically, oh, that's the wrong one. Sorry. Actually, I think it's this one. We can use this too. Oh, I don't have the 50% level on that one. Sorry. Let's try and get your act together, Brian. Sorry about this. Where did I put that? Well, I guess I can do it here. It's on my laptop. This is the danger. You shouldn't really do these charts on two different computers. Get everything all screwed up. 38.2. Oh no, 50% level. WD GAN. Boom. Here's the lowest low. Is that the lowest low? 74.5. 74.6. Oh yeah. Okay, so that's the lowest low. Well, anyway, there is the 50% level. 93,244. Also interesting too, and I don't really consider that a big fat round number. So it's weird. When I drew this off another chart, it came out to 93,300 even. And I was like, oh, now that makes sense. But I do like this, just simple thinking, all of these lows, right? This is where somebody stepped in and said, don't go down, go up. All right. Don't go down, go up. Don't go down, go up. Don't go down, go up. So we were just playing with these levels right here, right? Don't go down, go up. Oh, no, no, no. We want to go down. So, and unfortunately, by losing this level right here, and I don't really see too many people talking on the YouTube channel, but here's your opportunity to flex your, well, I know that Brian Beamish guy message backwards. What are we supposed to think if we ever see the market smiling at us? Uh-oh, that's not good. So the smiles are officially in place here. Boom. Yuck. It's not good. It's not a pretty picture. What I did point out this morning, though, and I think I did this in the lounge, was actually I was kind of pleased. Oh, there's the image. I was kind of pleased that, well, pleased. I mean, obviously, I want to make money here. So pleased is probably not the best term, but I was, how do you say this? Encouraged. That's probably the best word. That if we actually look at the total market cap market, they've just ripped it apart. And this is the total market cap minus Bitcoin and Ethereum. And as you can see, they're just destroying it right now. I wouldn't be surprised into the end of the month here. We do have to trade back down to things like candle body lows for trade location, 88.6s. I don't know whether you can see this. You might not be able to see this. How can I show maybe a better picture here? I don't know. Is that gonna work? Hey, there we go. Yay. All right. So if we do that same chaos theory fog and bomb off of this massive top up here, there's 1.618, and next stop on the hit list, 2.618, all the way down here. Also notice too, if you draw a trend line off of this peak, and interesting how it intersected here. Don't take a trade on a trend line break. Wait for a W on the other side. And no, I never really did get the W on the other side of this trend line, which means we might actually just have to come back down and kiss this trend line again. See that happen lots of times in the markets. Also, too, if we do harmonics, this peak here down to this low here, think of that as A to B. And then project that same A to B off of this peak, C to D. That's what this 100, 1.0 number is. And then, as I said, actually, I don't know whether I said it, but candle body lows for trade location, 88.6s. That's another Julian concept. So hats off to him for using that level. And then we also have a trend line off of these peaks all the way down here at this 1.618. So you can literally see that they are ripping crypto a new one here as we speak. I suppose you could argue that we came down into this interesting little gap on this chart here. So it does, to a certain degree, explain why the market, when it did start to come down, it stopped right at that level and had to go back up. That's a pretty powerful level in there, that little doji with the gap. Actually, this is even a trade setup that guy who won World Series trading champions like 3 years in a row. All he did was he showed up in the morning and just hunted for charts that look like this. And basically, a move through that high is a buy signal. And really, all you do is you replicate this range above that. And that's basically what that move is right up there. Somebody asking a question? What time is it? I must be talking way too much. Oh, it's already 1 o'clock. Yeah, I got to get out of here. That would be Joby Gap. Do you remember Joby? Were you around TBG for Joby? That might have been before your time. It also actually could be technically considered a gap and go, but the actual setup is to have a doji and then a gap away from the doji and literally trade through the high of the gapping bar. The next session, candle, whatever, is confirmation of the signal. Yeah, he was such a sweetheart. I miss those people. Anyway, so the point of the matter here is you can see that basically that Joby Gap signal, he would have won another World Series of Trading Championships. I think that explains why we pivoted here. But if we look left, where's the next one? Does look like we have a little bit of a doji kind of price action in there, which means that's that below. And what a coincidence. That's where we are right now. So I wouldn't be surprised if there is some action around this harmonic A, B, C, D. Having said that, you know me, I love my 78.6s. So I would expect us to at least come down to that 78.6. And I think it would make a lot of sense that we come down and we kiss this trend line and even maybe this trend line and some orgy panic of absolute despair. Keep in mind, we have not had the suicide hotlines and things like crypto at all. And I don't think a lot of people appreciate this. Keep in mind, I've been in this space now basically 10 years. And I distinctly remember in previous cycles, especially after the Gox disaster, and people thought that they were rich, and then all of a sudden they found out that they weren't. Man, the suicide hotlines, and I remember here too, BTCE. They dumped the price all the way back down to like $150 a coin, and people were just freaking out. And there were actually a lot of people. And I remember there was one gentleman at TRI who lost his lunch and really just went fucking crazy through this. So I don't actually even really hear the kind of despair that I've heard in previous cycles in this space, which is a little concerning because usually the ends of these moves, and really even in the stock market as well, but usually the ends of the moves, there's actually talk of people taking their lives and stuff like that. So I think that we still got some ways to go here. Off of the Bitcoin price, I had originally thought, to be perfectly honest with you, I had said this in some videos recently, that I thought we would have some pretty good play against this level. And you can see they just blew right through it. Now, what you might find is kind of like that image that I showed you before with us losing these moving averages. We might find that we actually paint a candle that looks something like this. Don't be shocked. It is interesting, though, that the 13 EMA is here, right? So this went through the 13 EMA all the way down to the 30 and then back up and tried to recapture the 13. There's not that much of a distance here. So I could very easily see maybe tomorrow, maybe Tuesday or something, some sort of dump back down into and let's call it the low 90s, somewhere in there. And then some sort of mysterious white knight appears, some sort of justification for feeling better, and things start firming back up again. But without a shadow of a doubt, we can't really expect bullishness in this space until we start forming some W's. We have to start seeing some sort of price action where we're having higher lows and higher highs. That's the only way we can start thinking bull. So as long as we're making lower lows and lower highs, the bull is just nowhere to be seen here right now. But as I had said there a few minutes ago, and I was trying to get to this, was anything I'd almost prefer that they just rip the Band-Aid off nice and hard, nice and clean, just get it done. And then we won't have to go through another one of these slogs where really all we do is range and then we finally start breaking down to lower levels. It would be much better technically just to get the Band-Aid rip done. But I don't know. You can't really predict the velocity of these things. So that's kind of the backdrop for your market here. It's not really the rosiest of pictures to paint for all of you. I didn't know how this conversation was going to go with you, but hopefully you get the idea. I mean, I think that the 4-year cycles here, I still think that they're perfectly valid and pertinent, and nothing's really changed in this image. The only problem that I have with the market was this push up here. It needed to clean itself up, and we are cleaning ourselves up. And we can't really get bullish here until we see some, at the very least, can we please have like a 3-bar fractal? So if this week is the low, and it might be, who knows? And we could paint like a nice inside bar next week, which, technically the starts here in the very near future. And then we got to trade up through that. Then at least we have something to work with. Right now, we've got absolutely nothing to work with. And on top of the fact that we have nothing to work with, the goddamn market is sitting there smiling at us. And we all know what we're supposed to think if you see the market smiling at us. Just got to leave it alone. And then to add insult to injury, this is going to be the most screwy couple weeks in trading you've probably all of you have ever seen, because we've got, international holidays on the 1st. You've got month end, and actually this is also this is also quarter end. It's also tax loss selling season end for a lot of countries around the world. If I'm not mistaken, I think Jerry somewhere is going to come in here and start speaking. You've got this crypto legislation that's now over in the House. Interesting to see whether the House can jam it through here in the next week. Of course, you've got World War III just floating out there in the background. Who knows what the hell's going to drop there next. But as I said, next week, this week is going to be kind of like, I think it's like a settling up of all the options expiry from last week. Because keep in mind, this was a huge options expiry event. I suppose in the coming week, we'll talk lots about the Bitcoin expiry and what the implications around that ETF were. And then, like I said, next week, I think is the real crazy week where basically most of the week itself is a write-off. Because you got, like I said, tax loss selling deadline for a lot of the world there on the 30th, next Monday, a week from now, not tomorrow, but a week from now. So that means there should be additional pressure, downward pressure on stuff. Now, people in the media, of course, are going to blame, Middle East and all that crap for it. But I think it probably has more to do with just the simple tax loss selling window. Then we've got holiday here. Then Americans have a holiday on Friday, which means they'll probably take off about halfway through Thursday to try and get to the cottage for the weekend. It's going to be like a ghost town. It's going to be really weird. We're ahead of the second quarter earnings season, so companies are going to be really hush hush about reporting numbers. this is going to be a really screwy couple weeks ahead of us, folks. I'm sorry. And actually seeing an image that looks like this right here, right now, actually is not really that big of a surprise. And of course, there is July 2nd. That's the day after the Canadian holiday, but July 4th, of course, is your US holiday. And historically, we see a lot of times the market actually likes to bottom through that window. So put it all together. There's not a hell of a lot I can sit here and tout as really bullish. It sucks. Full disclosure, I have been nanny nibbling away. I did a little bit. I spent maybe, I don't know, $1,000 or so over the past few weeks nibbling away. And you can see all the prices of the assets. Actually, interesting. OMG sitting. Oh, actually, that's a nice little treat. There you go. So this is a name that we were nanny nibbling away down here around 19, somewhere in that area, 19.2, I think. So actually, that's good to see. That's not a bad idea. There was another name that I was nibbling on that I really like, this C Pool, but they're knocking the shit out of him. So there's no bottom in there yet. I went and picked up some off of this level here and see you later. So not feeling any love there. I still like this name from previous cycle. It treated me really well. So I'm certainly not giving up on him. And then I did buy one, and the next day, one of our site OGs comes on and says, "You do know, Brian, that project's dead, right?" So I look like a total idiot on this one. Yeah, it's the way live by the sword, die by the sword. Anyway, I picked up some of this guy off of this level in here, and even the on I guess Friday, I was like, okay, well things aren't so bad. Oh, yep, they're bad. Ugly boosh. See you later. Keep in mind, I'm not too stressed about this because of the risk management strategy that I've taken on these names. I'm certainly not concerned if this thing goes off the board. And I do think into the fall, I don't know whether this thing's going to make me rich or not, but could I easily see rallies back up to eat some of these wicks up top here? Sure. And ironically enough, for me to get a double on this trade and just bang out a free risk-free trade, all I got to do is just see a revisit of these wicks up here sometime this fall, and I should be fine. But my nibbles of late, it is interesting to see. Oh, and I just talked about OMG, and they're already knocking them back down. Hope you enjoyed that rally. So the nibbles I've done of late, I don't see anything to get excited about here in shitcoin land. And unfortunately, my general message to shitcoin land, which really sucks, is until this silly thing bottoms, I don't think that any of this market is really going to turn in earnest. Does this thing have to go and wash out the lows here? I don't know. We'll see. Could I endorse a member of the site coming to me and saying, well, Brian, we are in reload zones. We are doing Wyckoff checks. I'm going to go and take a little nibble on this. What I would just simply say is the same message that I said on public discourse there the other day. And actually, I think the line was actually really well said. So I'm going to read it. There's my baby. I'm going to go be with him here in about 20, 25 minutes or so. There's that oil chart. If you want a nice detailed analysis of where I think oil's going, oh boy, that chart huge. Where the hell did I put it? Maybe it was more recent. Anyway, I just simply said markets can remain illogical far longer than anyone can remain solvent. Yeah. When you want to be bullish, but this is what you're looking at. Ugh, yuck. Ugh, yuck. And I simply said, look, until we actually start seeing W's here, just cool your jets. There's no hurry here whatsoever. That weird. I thought I had. Where was it? Yeah. So wouldn't be surprised to see a thumping here. And that was actually when we were still at the 1.618. We're actually quite a bit lower here than now. many names, I think, are basically at or near their lows. You're certainly not chasing. So I don't have a problem with Nanny Nibbles down at these levels. Space feels completely washed out. Unfortunately, though, when we look at the breadth indicator jumped up violently there and then started to roll over here with the stock market again, which sucks horse you know what. So there's the stock market. You can see it rolled over about a week or so ago. And then unfortunately, there's the crypto market. And oh, geez, that looks horrible. So we were basing out looking all nice and happy go lucky. Where's the newsletter? I can show you that a little bit better over here. And now you can see the breadth indicators are all rolled over. And what's scary is that slow is not in that oversold category anymore. So we had that nice bump up. I even put tweets out. Indicators are pointing up. Let's rock and roll. Come on, baby. Let's go. Let's go. And unfortunately, this is a function of a trader's life. You just have to accept this. Number one, you will never be right 100% of the time. So don't get into the business of predicting the future. Because, by definition, even if you're right only half the time, but you have a 2-to-1 risk reward, you actually make money as a trader. But you're only right half the time. That means the other half of the time you're wrong. And, like this is the business where you have to, I'm spitting on the cliches today. I hope you have your journals out. This is the business where you have to have strong convictions. You have to step into the breach. And if your setups are firing, your setups are firing. But you have to understand you will never be right 100% of the time. And it doesn't matter how pristine the setup is. If some idiot goes and bombs the fuck out of some country that is going to start triggering all hell to break loose around the world, well, maybe your setup just might not work. And that falls into the percentage category. Oh, well, it turns out that's about 20, 30% of the time, 30, 40% of the time, my setups don't work because idiots are nuking other countries. You don't know in this world. You just don't know. So we have an expression in this business, strong opinions. You got to be able to step into the breach and take your setup and live with the results, but loosely held. So if the market or if your indicator of choice rolls over and it says, I'm sorry, I'm not bullish anymore, you have to let go of that attachment to whatever story it was. And trust me, that ain't easy. And especially for the public, because the public, when they invest, quote unquote, they don't really, most of the time they just speculate. But when they invest, it's basically the start of a dream. And then they sit there, and keep in mind, I was a retail broker, so I know this from firsthand from clients. As long as they're in the story and they're in the trade, the dream is alive. Oh, I was going to pay for my daughter's wedding with the earnings from this. I've even heard that story even while I've been here at TRI. But I used to hear that as a retail broker all the time. So what ends up happening, of course, is if the broker calls up and says, oh, sorry, the setup failed, we have to go and book the loss. Then what you're explicitly saying is, oh, sorry, the dream is officially over. And the public absolutely hates when they hear that. So this is the number one reason why I always do these videos, and I always will down the future. If you're looking for the guy who has the crystal ball, and you're looking for the guy that's gonna, he's got this one indicator that's always right, man, you always make money with it, you are just asking for trouble. And I will never be that guy. And in fact, what I often tell people is, I don't care whether you buy or sell the stuff that I buy or sell. I don't care. In fact, I would almost rather you not. What I do care about, and I think I have to get back to this, and I think over the coming years, I am going to refocus my efforts. When I talk to you in the public, the most important thing I can possibly do is just simply be the demonstrator of best practices. That's not, oh, be the guy who's going to show you how to take $100 and turn it into $1 million in 4 trades. Boom, 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 boom. No, because that's not best practices. And sometimes when you trade and you have a beautiful setup that you absolutely love, your stop gets hit and you have to walk away and you can't get emotional about it. And that, unfortunately, is the hardest part of trading. There are ways and there are strategies that you can put into place that if you just can't sell, you can't bring yourself to do that. There are strategies that you can use to help with that problem. Little old lady, risk management. Make sure your bets are nice and small, nibbles, all that kind of talk. But yeah, I think it's really important that you all understand that I will never be right 100% of the time. Just it doesn't happen. And don't con yourself into going down that road. Risk management in this game is critical because you will be wrong. As long as you're right more than you're wrong on a statistical basis, you do relatively well in this game. But then that's predicated on the fact that when you are right, you better make damn sure that you pay yourself and you get paid for your rightness. And that's the sign of whether you make money at this over the long term. Anyway, Brad Voyage, my buddy. And how's Bradley doing? I hope Bradley's doing well. I never did get to meet your daughter, though. Did you guys? Did you find that kind of funny? I felt kind of bummed about that. I thought a lot about that after I left you guys. Oh well. Anyway, what are you saying there, Brad? Take the next couple weeks off and come back to Minnesota. The lake is warm now. And it's happy hour on the boat every day. I tell you, man. I'd be there in a heartbeat, but geez, that's a long drive. And I got to drive through. Where's bearded nerf herder and his better half? I got to avoid Alberta and the goddamn rocks on the windshields. Totally smashed my windshield going through Alberta. Anyway, say hi to your boy and your daughter and your wife for me. Absolute sweethearts. If you happen to be going through Minnesota and you want to hang out with one of the nicest people I've met on my journeys here, Mr. Voigt there is a consummate gentleman and he has a wonderful family. And he's also a pretty damn good builder too. Wow. Yeah. Anyway, nice to see you, sir. All right. It's about 20 after 1. Of course, I have to be up at the house at 2, so that means I got to be out of here in the next 10 minutes or so. Was there any questions, Chris, that I should have answered or spoke to that maybe I missed? Enjoy, Brian. He already confirmed he's going to retire if Bitcoin hits 200K. All right, there you go. All right. What's that? Sorry? Oh, yeah. Well, I have been uh I have been, pardon me? Okay. Oh, that's good to know. Somebody asked in the AMA document if the rumors of Brian leaving TRI at the end of the year are true. And I think I to be perfectly honest with you, I don't really know what my relationship is going to be with the TRI management team, but there is definitely a lot of change in the works. So that's probably the easiest answer for everyone at TRI. At the same time, too, made to obligations that I would teach one final level 3 program at the school. So if you haven't done the level 3 and or even if you're an alum and you've done the program, you want to do one last go around with Brian in the fall. In September, I'll probably be doing my last level 3 school program at TRI. And I think the daily briefs and those kind of things, I think all of that, it is going to change. There's no doubt about it from my perspective going forward. So do expect a lot of change. That's right, PTR. But at the same time, too, this is more a corporate problem than it is a website problem. The structuring and the management of it is just not agreeable with me at the moment. I think it's a great idea. And yeah, you're right. I mean, I've been known as the rational investor since Mr. Bollinger introduced me to the concept back in the 1980s. But interestingly enough, he let the idea go. Maybe I have to let the idea go too. So I don't know what, in fact, actually over the coming weeks, the management team is getting together to try and figure out what the future of this this site and this company and this community looks like. And if anything, this is probably actually a good opportunity. I would actually, me personally, I would prefer that the community members, like our buddy here, TBG, it sounds like he's got the religion, which is awesome. I would love TBG to be part of the TRI management crew and all of the various people over the years that have been part of the team. I would actually like the community to take over this project. And I'd just be a helper. If one thing that, oh, thanks, Jim and Liz. If it's one thing that I've always wanted over the years was to basically, and I've said this repeatedly in these videos, is that I kind of wanted to just fade away into the background from TRI and just let you flourish. And if you have actually learned from me, then I will see you not FOMO at the top of the markets. And I will all see you not get wrecked at the bottom of the markets. But the only way to actually validate that the work has actually been fruitful and has worked is I have to step away from this community. So I don't know exactly what the final version of what this is going to look like, but the bottom line is there is definitely going to be some material change come January 1st at this site. So that's unfortunately about as far as I can take the conversation right now. And to answer the question. If you do want to talk to me and you have concerns, just feel free to DM me. I'm more than happy to talk to you. And I've even said that if there are people that are still have credit for courses that they bought and paid for, and it's January and you still haven't, gotten your shit together to do the level 3, then just DM me, and I will be doing private coaching on my own down the road, and I'll be more than happy to honor those obligations. But it just won't be under this TRI umbrella. So anybody listening to this and concerns about, well, I bought the education program package and now you're saying maybe the education package is going to be changing. Just reach out to me. I'm a man of my honor. I'm a man of my word. You all know that I don't really do this for financial numeration. So if I have to take it up the butt first quarter of next year and teach a whole bunch of you privately just at no cost, well, that's fine. It's not the end of the world. And like I said there a moment ago, if you actually are interested in stepping into the void and helping the team along, keep TRI going, and you've been an active member of the community, then please let us know. And I might just, I think I'm thinking I almost would like to just donate my interest in this venture to that pool of people. And then that way you have some sort of equity stake. But that's speaking to how this thing is structured. And actually, I don't know whether that's even possible now. But anyway, if you are interested in sort of filling the void, you feel like you could teach this program, well, step right up and just let the team know. And hopefully what happens is TRI, you don't even really notice the difference when I'm gone. So anyway, we'll see what happens. Unfortunately, all great ideas are not necessarily profitable. There's a difference between a cash flowing business and a rich man's hobby. You know, the guys at Top Step, they used to always call me a hobby trader because I was more there for fun and demonstrating best practices versus taking a shit ton of money from the market. So, for whatever it's worth, you could call me a hobby trader. I like to do this for fun. You know, kind of the ironically enough, my whole Twitter feed, right? The thing that I put at the top of my thing. I actually did this as a challenge. I didn't really want to make a bunch of money or whatever. But it turns out that this was a fun challenge and we did make a bunch of money. But the only reason why I did it was because it was a challenge, not because I sat down and said, okay, I got to go make $1 million. Right? So that's the weirdo that I am. I've always said to you guys and girls and houseplants, if you concentrate on the process goals, make sure you're playing the game correctly, the money takes care of itself. It really does. And if anything, that's probably a great note to finish on. So wish me luck on the road with Lily. PMA for the win. Slow and steady wins the race. Try not to take no wooden nickels, especially this guy's wooden nickels. Be careful. Could absolutely teach a course on how this guy's getting absolutely destroyed in the market right now, which is hilarious. And really, I don't think we need to get too uberly bullish until we actually start seeing some W's come in on these price charts. You can see there's no W's here. So nanny nibbles, stink bids, keep the risks really low, perfectly fine, but don't go and bet the farm in this kind of market state. And my hunch is a video broadcast that I do in a couple of weeks from now. Once we maybe I'll even try and make a special effort to do that video broadcast like 6th, 7th of July. We should be starting to emerge out the other side of whatever this shitstorm is right now. So hopefully that wisdom helps you at all. It's certainly not investment advice, but hey, I'm just trying to trying my best to help all of you. So. All right. Have yourselves a great day. All the best. And bye for now.